Hello everyone, welcome to Just Invest Today, and today we have to talk about this topic, GE, the rise and fall of GE. Man, shareholders have been suffering while these GE managers and their freaking counterparts and everyone in those offices on the shareholder freaking board, they're all getting rich off the shareholders. So these are going to be important lessons for you guys, for me, just going through this article, and just this is the teaching moment of what not to do and what to do when you're investing in these companies and what to look out for. So let's get into this video, guys. But before that, can you please like this video, subscribe to my channel, and I'm going to provide you with a lot of good content. So Wall Street banks generated 7.2 billion in fees from the rise and fall of GE. Advisors' profit from conglomerates' market value has slumped about 75% since 2000. Can you imagine that? See, this is what Warren Buffett always talks about. People make more money doing all these splits, all these refinancing deals, all these mergers, all these acquisitions. The bank wants you to do all that stuff because they're the ones writing it, they're the ones doing it, and they're the ones generating all these fees. So just be wary with companies that keep doing that or have a history of doing that. Make sure they're doing it for the right reasons, not for the bad reasons. So you just have to kind of look, what is the CEO saying about this, or what are they doing? Is it going to actually generate income for us, the shareholders? So you got to be cautious about that because these CEOs, some of them don't care. They make money off of this, and they're in cahoots with all the bankers. So let's get into it, and let's look at the share price of what GE did. Since 2000, look what happened, $408. It never got back up to that amount of money. Since 2000, it's been down 75%, just how it said, man, and it's been brutal if you were a GE shareholder for that whole amount of time. You've just been getting killed, man, so you just have to learn. So General Electric has paid more than $7 billion in investment banking fees since 2000. Wall Street lenders reaped rewards from the frenzied period of deal-making that culminated into a sinking share price and eventually breakup. And Warren Buffett says that most of these acquisitions, these refinancing deals, whatever it is, these mergers, they usually don't work, man. And GE, the companies like this, when you're noticing the CEOs getting bored of their job and they're just doing some random other garbage, it's probably time to get out of that company. I remember when Warren Buffett said Coke used to want to do shrimp. They were finding shrimp and investing in shrimp companies. That has nothing to do with Coke, and they just got bored. And another one of these companies was investing in oil. I think Gillette. Gillette was, Gillette shaving company. Guys, they were investing in freaking oil. So once you see they doing all these random acquisitions, mergers that have nothing to do with the real business, or they're not even generating money, or not returning, having a good return on equity after these mergers, be very wary and just question what they're doing, because these CEOs are profiting from getting bigger, just getting the company bigger without actually generating money for the shareholders, us. So pay attention to what's happening with the mergers, the acquisitions, and all of that stuff when you see your company doing it. GE spent 2.3 billion on mergers and acquisitions advice alone. Just on advice, they spent 2.3 billion dollars, man. And this is a company about light bulbs, the wind turbines, and this article is coming because they're trying to split up the company. And guess who's gonna profit from the split? They're trying to split into healthcare, into energy. They're just trying to split the company up. And guess who's gonna profit from that? The damn CEO. So it's just painful to watch what these companies like GE can do and get away with. And there's no remorse for this garbage that they're doing. Critics have said that outside fees are indicative of how bankers who have profited despite GE's market value falling about 75%. So they're profiting no matter what happens. GE has been an acquiring spree for more than 20 years with disastrous outcomes. Look at the top 10 banks netted huge fees. J.P. Morgan, Morgan Stanley, Goldman Sachs, Citi, Bank of America. Like these guys are all generating money from GE, and GE is just like blind-eyed, doesn't care, screw the shareholders, all that good stuff, and they think this is positive for the company, which is mind blowing. And this is the guy, like Larry, look, he's the one getting all the money. The GE plans to split the conglomerate into three companies focused on aviation, healthcare, and energy. And we can't know the ultimate outcome of such split, but there is an absolute certainty. CEO Larry will have extraordinary financial gains. And that's it right there, guys. When we looking at these companies, we gotta look at these stock compensation plans and the plans of the CEO, how they getting paid, how they generating their money, what are their goals, right? Look at the CEO goals, look at what he's saying, look at what he's doing. Like you gotta look at how he's getting paid because the incentives are gonna be indicative of what you're gonna do and how the company is gonna progress. Like if the company just progresses by just getting bigger, and that's how the CEO is getting paid, they're just going to do a lot of bad acquisitions that are actually destroying shareholder wealth, right? Because that's all they care about. They're just getting bigger, just getting a huger market cap. But is that generating returns for the shareholders? No. Then why would we invest? We got to leave that company. We can't, we just got to go to somewhere else. Don't even invest in it. So looking at company incentives is usually really key, man. Like are they like how are they earning their money? Like what are their projections for the company and how they're getting paid based on those projections and on the company's success? Like are they getting a high return on equity? Is that getting paid by that? Are they getting paid by what? Their capital allocation decisions, the revenue growth, their earnings per share, like and then how are they doing it? How are they getting those earnings per share up? Are they doing bad buybacks to get that up instead of actually growing the earnings of the company, the bottom line? There's so much stuff you have to remember before you invest in these companies and what these CEOs are doing. Because look at Larry. He's making money. His compensation, he's getting $73 million from 2 stock awards. And this is because he's able to split the company up and actually get a larger pool of the money. So these is what these freaking CEOs are doing. So and do we really think this is going to be generating wealth for the for the shareholders? Who knows? They haven't been doing it for 20 years. So do you think this all of a sudden is going to generate all this income for us shareholders if you like had bought into GE? Like man, like it's just crazy. Like it's just crazy. Like look what the S&P has done, man. 150% GE negative 50. So man, honestly, if you're a GE shareholder, I feel bad for you. Or if you even invested or thought about GE, but GE was, I guess, a good company back in the day, but they just fell off. So guys, we have to understand that understanding how the CEO get paid, how is he compensated, like show me the initiatives, show me the way he gets paid, because that's gonna show you how you're gonna actually become successful in investing and get that successful company growing if you're actually invested in that company. So just remember that, man, and just remember if they do a lot of mergers, acquisitions, and all that stuff, like go into it. Don't let these CEOs off the hook. Go back, look at those acquisitions and mergers, and see if they did a good job on those. Did they generate like a bottom line revenue growth from those acquisitions? Like you have to go back and see what they did, and don't just like kind of like scoop it over the rug or under the rug and make sure they didn't matter or whatever. So guys, that's it for this video. Can you please like this video, subscribe to my channel, and I'll get back to you in the next video. Peace.